Well, welcome back to the Undervalued Investor YouTube channel, where we're looking at the comparable markets of Canada and US to see where we currently sit on interest rates. We'll talk about inflation, some of the CPI numbers. We're going to talk about the housing market, a little bit to do with energy and oil, just to see what the macro economy is doing currently and some speculation on what might happen moving forward. If that is a conversation you'd appreciate, support the Undervalued Investor YouTube channel by hitting that like button and subscribing for future videos. First and foremost, interest rates are holding a 20-year high, over 5% in the US and in Canada. And this is leading to a lot of speculation, especially coming up in this next meeting. The Bank of Canada is going to be doing a meeting. The Federal Reserve is doing a meeting this September. We're going to take a look at the CPI numbers, and we're going to see what that means for inflation, because that will largely dictate what interest rates are going to do moving forward, right? And because inflation has been rather sticky, holding up at around this 3 percentage points, if that's likely to continue moving forward, a lot of people are speculating, obviously, that we might see 2 more interest rate hikes coming into the end of this year. Though if inflation, and I think they should pause a little bit on the interest rate hikes just to see what happens, because these are hiccups we've seen already in the declining cycle. There's always a little bit of bump in inflation, and it leads to the further downtrend, because right now we're talking about a double-edged sword. The inflation numbers are primarily being driven by shelter as of late, which we'll take a look at the CPI numbers, but we're seeing housing stay relatively strong. In the US, it's starting to go back up from a median house price point. We're taking a look in Canada here, where prices have actually been holding flat. Now, this is going to be dependent on the cities you live in, the states, the provinces here in Canada, but all in all, housing has been remaining excessively strong because of the insane supply and demand metrics, with a lot of immigration in Canada driving some of the supply and demand. In the US, obviously, with interest rates holding so high, people don't want to sell their place, go buy a new place, or upsize. They don't want to take on the new higher interest rated environment. They're going to hold, they're going to sit till the renewal comes up and just see what the market does. So if interest rates don't come down in the next, I'm going to say 1 to 3 years, it's going to inflict the housing market, but how, we don't really know as of current. I'm honestly speculating, presuming we get an extended 3 to 6 months, at least 2 quarters of nominal inflation data sitting at around that 2% target, you're going to see them start cutting interest rates. And I would expect that to happen sometime by spring or summer of next year. But right now it's a double-edged sword, and I think it would be ignorant for the Canadian Bank and obviously the Federal Reserve to start raising rates again, because a lot of this is driven by interest rates. I mean, it's kind of counterintuitive, but when you raise interest rates, and the biggest expense for most people being shelter, it's going to cost more for people to get their mortgages. It's going to cost more for that landlord to get a tenant in and cash flow positively. So he's going to pass that on to the renter, and that just continually drives up shelter costs. And we're seeing that, right? Take a look at the US CPI numbers here with shelter. If you scroll all the way over here, we can see that shelter actually jumped up about 0.4 percentage points. And on a 12-month basis, it's up 7.7 points, which is pretty much the highest of all the leading, data points here in all these different sectors and consumer products. And taking a look on the Canadian side of the market, again, no surprise. If we scroll down and just take a look at shelter here, we can see shelter's up 0.7 points. And again, it's one of the leading causes next to food in the inflation numbers. So if they stopped raising rates and let things normalize, I wouldn't be surprised if we are already well at that 2% level. Now, Canada is inflicted by a lot of other things when it comes to carbon tax on our gasoline prices. So if you actually take a look at the change on the month over month, gasoline prices, even though the numbers have descended roughly for, the last 6 to 12 months, we can see gasoline prices in Canada up 0.9% on the month over month. Whereas in the US here, if we take a look at gasoline prices, we can actually see it's at 0.2. So Canada has a different infliction, considering Canada holds some of the largest global oil reserves because of the political rhetoric and the carbon taxes and all the increases around energy over the last year. It's incredible to think that that's a self-inflicting wound as well on some of the inflation numbers. So there's a lot of controllable aspects at this point. Inflation isn't running rampant. It's not out of control. So in my personal opinion, I don't think they should be raising rates. I think they should pause to let things nominalize out. And, we'll see if that's the route that they actually take. And obviously, we've been seeing oil prices climb a little bit higher, and this is likely to continue for a little bit. The reason that we've seen oil prices go up is because to help cool inflation in the US, Biden withdrew about 180 million barrels from the strategic reserves starting in March of 2020, bringing that stockpile to its lowest level since 1980s. And now, as of recent, through the last couple months, we've actually seen them announce that they're rebuilding those stockpiles and have been purchasing barrels pretty much through all of summer. So that is obviously, causing a little bit of supply and demand on the oil prices. So it's likely if they continue to fill those reserves in the Western world, we should see a little bit more strain on oil prices going, moderately higher. But this is just taking a look at the macro environment. And I'm going to pass the question off to you. I'd love to know where you think interest rates are going. Do you think we're going to see housing collapse, or do you think, they'll start cutting rates before all those mortgage renewals come into play. It's a very intriguing game of chess. It's like, 4D chess at this point. But again, I'd love to know what you think in that comment section below.